discussing the new legislation that's been proposed in Congress as it pertains to the Tax Act. Some of the changes that are being proposed are an increase in standard deduction from $6,350 to $12,000 for single filers, from $12,700 to $24,000 for married couples, and the creation of a larger tax bracket of zero tax bracket for up to $24,000 of income. Also, it incorporates the reduction of the tax brackets to 4 brackets, 12% up to $90,000, 25% for above $90,000 to $260,000, 35% from above $260,000 to $1 million, and 39.6% for $1 million and above. It increases the child tax credit from $1,000 to $1,600. Earned income credit remains the same, but no adoption credit offsets. The non-refundable credit of $300 for dependents is a reduction, but it expires in 5 years. It also eliminates your exemption, so you don't get your exemption anymore. It retains charitable deductions. It caps the mortgage interest on properties up to $500,000. It gets rid of the state income deduction or your itemized deduction. So real quick, let's just take a quick look at kind of how this affects. So we have Joe and Sue Blow. All right, so Joe and Sue Blow have, under the current law, have an adjusted gross income of $50,000. Okay, so Joe and Sue Blow, under the current law for 17, will have a standard deduction of $12,700, taking them down to a subtotal of $37,300. Joe and Sue Blow have 2 children. That will give them at $4,050 per exemption, an exemption of $16,200, giving them taxable income of $21,100. Now, Joe and Sue Blow, on the first $18,450 under the current law, will pay $1,845 of tax. On everything above $18,450 under the current law, they'll pay 15% tax, which equals $398, for a total of $2,242 in tax. Joe and Sue Blow have 2 children. They get a tax credit of $1,000 per child. That's $2,000, giving them a subtotal as far as remaining tax of $243. Joe and Sue Blow had $5,000 withheld from their paychecks, giving them an overpayment of $4,757. They're at the edge of an earned income tax credit. They get $36 of earned income tax credit, giving them a refund of $4,793. They have no additional child tax credit, as that additional child tax credit was used on the $2,000, reducing their income tax. Now, under the new law, Joe and Sue Blow, still making $50,000, get a standard deduction of $24,000, almost doubling their deduction. Subtotal of $26,000. They don't have an exemption anymore, so their taxable income is $26,000. Before, the taxable income was $21,100. They still get the child tax credit. Joe and Sue Blow still get their okay. Pardon me. Joe and Sue Blow, on the first $24,000 under the new law, pay no tax. So that's a zero tax on the first $24,000. They have leftover $2,000, which gives them a tax of $240. So their total tax is $240 in the new law. Under the proposed law, under the current law, there will be a 17, it will be $2,243. Joe and Sue Blow pay $2,003 less, or assess $2,003 less taxes under the new law. They have a tax credit of $3,200, but since their tax is only $240, they can only apply $240 against their existing tax, which takes them down to a zero